Hey everyone, welcome back to another edition of Super Prime UK with your MJ Group Super Prime Valuation Specialist, myself, Rob Cohen.
And myself, James Wild.
Hope you're all well. I've been travelling around Europe, visiting all of our banking and lending clients. Great to catch up. Some good times overseas. Welcome back to the show. And James and myself, as always, will be updating you on everything that's been happening in the market and giving you the live update of what's going on the ground. First and foremost, let's start with the World Cup. James, good week for England, through to the next round. What are you making of everything?
Yeah, obviously, really positive result for England, top the group, which means obviously we've got the slightly easier ride through to the quarterfinals at least. We've got Senegal coming up Sunday evening, and then possibly it's looking like we'll play France after that in the quarterfinals. That's going to be a big one to get past. Obviously, tournament history haven't got great records against France, obviously the World Cup holders. Interesting sort of loss for them last week, Rob. Lost, still topped the group there, though. I still think Brazil, the team to beat.
Yeah. So, by the time we next record, the next show, will England be in the World Cup? Hence, maybe have beaten Senegal and possibly France, or will we be drowning our sorrows?
I'm going to say yes. Feeling, pretty optimistic. I think Gareth Southgate's been quite clever in terms of his squad rotation. All the players should be pretty fresh. He's had, obviously, Kyle Walker coming back into the side, introduction of Phil Foden playing quite a starring role, as with Marcus Rashford. So, be interested to see how they line up. Is he going to go to the five at the back, three across the middle, Maguire, John Stones, and obviously Kyle Walker will shift in there, probably opening up the right wing-back slot to Trippier, which then probably favours a more narrow sort of Phil Foden. So I feel like Marcus Rashford probably is going to lose his spot, at least in the France game, if not in the Senegal game. That's my prediction, certainly on formation and lineup.
You've heard it first on Super Prime UK. James says that England will still be in the tournament by the time we next record. Let's find out what's happening in the market. That's what everyone has tuned in for. What's the latest data? What's happening out there?
Yeah, thanks, Rob. So in terms of the Central London data we've got, the market is being fairly robust in terms of the super prime and prime figures. New instructions slightly down this week, Rob, in terms of 245. They've been averaging for the year about 300. So as we're moving into that festive period, people may be just taking the decision to hold off until January. Generally, the property market closes down that sort of end of December, that 2-week period. So we're going to have to monitor that, see what happens in terms of new instructions. Good pipeline under offers, 176, while sold figures this week above average, Rob, for the year, 168. So pretty positive there in terms of this data. In terms of the rest of the market, slightly more subdued, less activity, a higher rate of fall-throughs that we're seeing there.
Yeah, I think it's a continuous message. I've been repeating it for the last few weeks. We're in a two-tier market. The prime, super prime is performing with a consistent flow of transaction and volume, and the remainder of the market and the remainder of the country is slowing down with a dip in volumes, and I think you've got some data to confirm that.
Yeah, no, thanks, Rob. So in terms of on a macro basis, a lot of Britons are increasingly putting their sort of home buying plans on hold. Any spare cash, some people making use of the slightly higher sort of savings account rates, especially if you're sort of fixing for any sort of 12 to 24 month period there. In terms of the net mortgage borrowing, this is fallen quite dramatically, Rob. So in September, 5.9 billion, whilst the latest data for October is down from 5.9 to 4 billion. So a significant fall there in terms of net mortgage borrowing, and that's the data from the Bank of England. Obviously a slight lag there. We have to wait and see what the November figures bring, because they could be down again actually, Rob, and just showing how rapidly the market has cooled in the last quarter or so. In terms of mortgage approvals, which do go hand in hand with the net mortgage borrowing, these have fallen by more than 10% to 59,000 in October, Rob, down from 66,000 in September. And we've got a graphic here, which you'll see on the screen, which will just highlight that also.
Yeah, I think that trend is going to continue. You're going to see the same in November and similar in December. Obviously, there's a lag, but we're live and we're reporting on everything that we're seeing. Those volumes are down and have slowed down tremendously. And this year, from a mortgage approval perspective, is more or less done. And we're all looking to 2023 with the hope of improvement.
Yeah, and in terms of annual house price growth, which again, all these metrics are linked and give you, a macro view of the market and what's happening. But the annual house price growth has fell for its sharpest rate in 2 years, according to Nationwide. It's obviously the impact of the cost of living crisis, the higher interest rates. Obviously, we had the mini budget, a change of prime minister in the UK, all of which has unsettled the UK economy, sort of as we head into the festive period there. House price growth annualised for November has slowed to 4.4%, Rob, obviously down from 7.2% the month prior in October. So again, highlighting the real slowdown which we're seeing in the market. And the 1.4% month-on-month fall for November is the biggest drop we've seen in the UK housing market since June 2020, which is obviously the fallout period of when COVID was really striking and ripping through the country and globally the world as well. So I think all the data there it's highlighting how rapidly the market is cooling, what's happening across a number of metrics, all of which are showing less activity, less transactions in the market.
Yep. We wish we had something more positive to share with you all outside of that hard data and hard facts, but that is the reality. I suppose there are some specialist markets that are performing very well. Prime, super prime is one of them. The bridging market, the alternative lending market is performing and outperforming retail, high street, mainstream lending. And then obviously other nuances in the marketplace, that there are always performers, even in challenging times. And that's what we're also seeing as a business, whereas maybe your mainstream vanilla lending has quietened, specialist lending really comes strong in challenging times.
Yeah, and just in terms of rates, Rob, there's a couple of specialist buy-to-let lenders reduced their rates in the last week or so. We've got sort of Landbay here. They've reduced a lot of its rates on its 5-year fixed by up to about 0.3% there. So a 5-year fixed now on a 65% LTV, that's about 5.3%, but it comes with a sort of fairly hefty 3% fee. We're cross-checking that with Fleet Mortgages, another specialist buy-to-let lender. They're offering 5.49% for a 65% LTV 5-year fix there, but sort of lower fees there. So very competitive pricing there. Just some of the lenders sort of front-loading in terms of the fees. Others are sort of blending a slightly higher rate across the term. So what's your view there, Rob? The mortgage rates slightly come in on some of those buy-to-let products.
Yeah, I think that the markets have responded positively to the budget and the new leadership in the UK, and that's given confidence to lenders to pull in their positions that they had previously, where the uncertainty and volatility reached record highs. And on that basis, I think you're going to see over time more competitive pricing.
And just what we were saying, Rob, in terms of the data on the mortgage approvals, do you think some of those lenders just eating into some of their margins slightly to lower their 2-year and their 5-year fixed rates just to try and give themselves a competitive edge in the market?
I think that could be a possibility. I think in 2023, that will definitely happen because the lending that has taken place for the banks in 2022 has been very positive. Many of them have made their targets and had really strong years and profit margins. Thus, the appetite as the year is closing out isn't as strong and doesn't need to be because they've produced what they've needed to produce in 2022. And I think in the first quarter of 2023, we'll see the banks become more competitive and eat into those margins for sure as they look forward to what they would want to be as a positive year. And I think that will be very good for the marketplace.
Thanks, Rob. Just looking at sort of the opposite end of the market here, that sort of entry level, reading some articles come out this week in terms of the average age of the first-time buyer. This is up to about 37 years old now, Rob. A couple of years ago, it was around sort of 32, 33. Obviously, quite a sharp rise there. We've obviously had the cost of living crisis. We've had Help to Buy now removed from the market. That's being completely sort of phased out from March. Is this going to go even higher? What's going to happen to that, Rob, those first-time buyers?
Well, if there is going to be a price fall in the year to come, and there is a reduction somewhere between 5 and 10%, which many commentators are predicting, then you would expect that number to come in because affordability should improve, not in the very short term because we're facing a challenge there. But over the medium term, if prices come in, affordability should improve as the key parameters and variables turn in a more positive direction. So I'd be very hopeful that that number comes back a bit.
Yeah, okay. I mean, obviously we've had record low interest rates for some time, particularly during COVID, possibly allow for higher multipliers, people taking on longer mortgage terms there. So that slightly sort of readjust in that mortgage market and the structure of lending, possibly impacting those first-time buyers also. Just wanted to, as we're talking about sort of first-time buyers, Rob, the rental market certainly in London has been very, very hot the last 6 months or so. A lot of rental growth in many areas across London. On top of that as well, build to rent, a lot of sites now, a lot of investors are sort of pouring money into those sites, possibly with slightly more advantageous planning permissions on the build to rent rather than the sale units in terms of that affordable housing contributions there. Coupled with the recent rental growth, the rising age of the first-time buyers, and also the flexibility it offers, these are really strong indicators for that sector, Rob. Is that going to increase even further in 2023?
I believe so. As I said previously, there are alternative markets that are performing and where investors' money is going. That is one of them. And I think that area will go from strength to strength. Institutions love it. And I believe there's big growth in the UK still in that market. So absolutely. Brilliant. Thank you so much, James. The next edition will be our Christmas edition, the last one of the year. And as James has already said, we will be celebrating England going through to the semi-finals of the World Cup, and we'll be talking about that. Take care, everyone. Good to see you, and we will be back soon.
Thanks, Rob. Thanks very much,
James.
everyone.